deliberate.
It seems we lost Gupta ji.
So we are proposing to discuss and deliberate on the two specific amendments proposed by IBBI with regard to the valuation aspect of CIR. As we all understand, valuation is the quintessential or a very, very critical aspect of the whole corporate insolvency resolution process. Regulation 27 and 35 provide for appointment of valuers within a given time frame, and as per the current guidelines of IBBI, two registered valuers are required to be appointed for each of the asset classes by RP, and you have those timelines 7 days and 47. In case the estimates of the value given by the two valuers vary significantly, and that is defined as divergence of more than 25%, then there is a provision of appointment of third valuer, and then we arrive at the basis of estimate of value by looking at the average of the two closest values that we get out of those three estimates given by the registered values. That is the process and that is the methodology that we all have been following and working through as per the guidelines and regulations of IBBI till now. What IBBI is looking at now is they are referring to Rule 8 of the Valuation Rules 2017, which says that, I'll give you that para here on the screen. This is 8.2. The registered valuer may obtain inputs for his valuation report or get a separate valuation for an asset class conducted from another registered valuer, in which case he shall fully disclose the details of the inputs and the particulars, etc., of the other registered valuer in his report and the liabilities against the resultant valuation, irrespective of the nature of inputs or valuation by other registered valuer shall remain of the first mentioned registered value. I mean, the divergence between the current practice being followed as per the CIRP regulations 2735 and also Rule 8.2 of the valuation rule is very, very clear. We have been following the methodology of appointing two valuers for each of the asset class, whereas the valuation rules talk about appointment of one registered valuer to carry out valuation, both fair value as well as liquidation value. But in case it wants to get assistance from any other registered valuer for a particular class of assets, he is free to do so, but then he has to disclose the details of the inputs and particulars of other registered valuer, and the responsibility ultimately rests with the first mentioned registered value. So what I feel and what I see here is, as a preamble, as a perspective is, there is a paradigm change proposed by IBBI in this context, that instead of doing valuation of assets on individual asset basis, land and building, plant and machinery, securities of financial assets, probably the move now is to move towards carrying out overall business valuation. While carrying out overall business valuation of a corporate debtor, obviously there may be certain assets which a particular RV may not be competent enough to carry out the valuation, and there the flexibility is provided in the rules that you can engage any other valuer, take his assistant, take his inputs, disclose those inputs, disclose the identity of the registered valuer, but end of the day, the responsibility lies with the first registered valuer. Now the floor is open for discussion, views, observations. The Proceedings of this interactive session are being recorded so that we can compile, collate the views of all the group members here, and then probably we can submit them to IBBI with necessary editing wherever required, small, kind of thing, with a view to improving the flow and the syntax. So the floor is open for observations, please. Any one of you who wishes to express his or her views, observations, may kindly raise your hand and then may kindly speak after introducing yourself. So let's have the views of the members present here on this link and platform. What are your views with regard to the proposed amendment by IBBI with regard to the basic approach and methodology to be followed for carrying out valuation of a corporate debtor? Anyone may kindly start, please. What are your views with regard to this proposed amendment?
See, hi, this is Shubhendu.
Yes, sir. Yes.
Please. Good morning, everyone. Sorry, I joined a little late, so I just got the last part.
No problem.
So, see, if I look from a valuer's perspective, as a professional, I would rather like to have inputs from other experts because it mitigates my professional liability. But here the larger challenge is coming from the COC and the IPs because bringing in more experts mean higher cost. And COCs and IPs are, not so much as IPs, but COCs are not willing to put that cost. Today we have a situation where we have another set of discussions going on a minimum fee scale.
I understand.
So in that scenario, I think this is, if at all, this is not going. So what I'm trying to say here is that giving it as an option to the registered valuer is not going to make any changes. Making it mandatory for IPs, that is going to bring in changes because then everyone would be at the same level. So if the IP insists that these assets, you get that this specific expert on board, which means that for every registered valuer, they have to find someone. Otherwise, if it becomes a recommendatory or a non-obligatory requirement, we would be back to the square one. This is not going to help bring in changes which IBBI wishes to bring in.
Okay, I get your point, but the first line itself in Rule 8.2, the registered valuer may, even in the rules, they are putting the word may, keeping it open, keeping it slightly optional on the part of a particular registered valuer to take assistance from other registered valuers. Yeah.
Sir, this is
Pankaj
Tibrewal. I am an insolvency professional based at Kolkata.
Yes, sir. Yes.
So this is on top of Mr. Shubhendu's remark or comment, what he said. But if let's say IBBI makes it mandatory for the insolvency professional to, as Mr. Shubhendu suggested, that to take the opinion of an expert in this regard, then it's going to be the same square one wherein the all class of credit, valuers has to be appointed. Here, what I understand from this proposal or the discussion paper of IBBI is the aim is to minimize the number of valuer, and depending on the size of the corporate data and complexities of the matter, they can take help of other valuers or experts, and accordingly they can quote their fee. So one is that for all small cases, even wherein if you see the total claim is 2 crore, 3 crore, 5 crore, 10 crore or likewise, and COC doesn't see any kind of possibility of any recovery, and there the cost can be minimized, and for the MSME kind of environment, the cost can be minimized. I think one of the objective of bringing these changes is that, however, to the point again, to Mr. Subhendu's point, yes, for the bigger case or the complex cases, we must allow some kind of recommendation by IBBI that maybe a size or the type of assets available on the corporate debtors financials, depending on that, some kind of maybe mandatory requirement being put in that in case the assets, let's say, of some benchmark of greater than that value, that becomes mandatory to take experts view in that case, and therefore that may make lot of difference, I believe.
Okay, so let's look at the proposal para of the IBBI discussion paper, which is there on the screen. In order to streamline the process and remove ambiguities around the present framework of appointment of valuers for the purpose of valuation of the corporate debtor and to align the regulations with the valuation rules, it is proposed that the CIRP regulations may be amended to specify what are the
ஜங்ஷன் வரும்போது கொஞ்சம் நிறுத்திக்கணும். லெஃப்ட்ல போகணும். ஃபோன் பண்ணிட்டு வருவாங்க.
All the participants are requested to kindly mute yourself, please. Thank you. Thank you. So it is proposed to specify that the RP shall assign for carrying out the valuations of the CD as a whole to the RV. I mean, this is the crux. That if this proposal goes through and if this is incorporated by way of amended regulations by IBBI, then the whole scenario is going to be changed in the sense that RP in that case will appoint only one valuer and he'll be given the task of carrying out valuation for the CD as a whole. But then, of course, subject to the already existing provisions of Rule A2, RV may conduct the valuation as per Rule A2, taking inputs for other asset classes or get the valuation for an asset class conducted from another registered valuer if required. That would be optional, an option available to one single valuer appointed by the RP if this proposal goes through, but still the option would be there with the RV to take help from the other category or other asset class registered valuers.
Hello.
Yes, please.
Mittal this side.
Yes, sir. Yes, sir.
I think there are a couple of points that should be looked at. One is so far, I think IBBI has been very stringent on an RV doing a valuation for another asset class.
Yes, sir.
So in this case, now they are allowing that, say, for example, an SFA valuer is appointed and they can undertake the valuation of P&M and land and building as well. Now, whether RV is mandated to appoint a P&M and land and building valuer, take inputs, or the SFA valuer can himself or herself give that thing. Now, if SFA valuer doesn't specifically appoint P&M valuer, say for in case of valuing some small P&M assets, then whether that SFA valuer will be reprimanded that you didn't take opinion of the other valuer in this case. That is one point. I don't think it will affect the overall cost as such, this move, because even in this case, the one valuer will take into account the cost of all three valuers if they go by the whole thing. But this thing should be definitely considered. And one more point is, if they are taking the inputs of other valuers, P&M or land building or then whether the rule valuation rule says the ultimate responsibility remains with the first valuer who is actually appointed. Now, whether that first valuer would want to take the responsibility of the other asset classes, so far they are not taking.
Right.
I think these are the points that should be considered as well.
Yes, please. So just moving away from IBC for just a moment and drawing analogy from how valuations are carried out in the corporate sector, say, for example, in the case of M&A, mergers and acquisitions, there, I mean, the going practice that we have in the marketplace in the case of M&A transactions, where valuation is required to be done, is that there a valuer is appointed, not for each asset class separately, and the appointed valuer carries out a business valuation. It is not the practice to carry out valuation of each different class of assets and then aggregate them together, but they work out the value of the business on an overall holistic basis. I think that is the move that IBBI is looking at, converting the whole process of carrying out valuation of each asset class separately, then doing the aggregation. They're probably looking at the perspective of moving to the concept of holistic valuation for the business.
Agreed, sir. I think that is a very valid point. I completely agree. But the thing is, the valuation scenarios in going concern M&A and in the CIRP cases is completely different.
Absolutely.
And in those cases, mostly the methods used are maybe DCF, future cash flows, or relative valuations methods that are used, and not an asset-specific method that is used. Right. Whereas in CIRP cases, mostly the method prevalent is the asset-based method. Right. Because there are no projections for DCF or really comparable companies that you can compare the thing to. So that is I think the reason. And even in that, yes, if there are significant assets that need to be valued separately in M&A cases, then they are taken into account. I agree that in that cases, it is taken into account. But then the whole scenario, I think, is still completely different in those scenarios. Cases.
Right. Any other views, please?
Good morning, sir.
Good morning, sir.
Here is Sushil Kumar Punde calling from Aurangabad.
Yes, sir.
I am an IBBI registered valuer for land and building.
Yes, sir.
I think this proposal is somewhat difficult to implement because for example, in one scenario, suppose one person who is a land and building valuer, IBBI registered valuer now, is appointed as a valuer. Now, proposal says that the responsibility goes on the main appointed valuer, whether he will able to take the input from other, suppose for example P&M valuer for a particular case as such. If there is a professional negligence somewhat maybe detected afterwards from the other valuer, that is P&M valuer, unnecessarily the land and building valuer will be suffered with such kind of law if it is implemented afterwards.
Right.
As well, suppose for SNFA valuer is appointed as a primary valuer or the main value, and the other two categories are subsequent to the particular valuation report, and they made somewhat professional negligence in that particular valuation report, then unnecessarily the SFN valuer will be suffered afterwards.
Right.
How do you think that this is going to be the right path to simplify the CIFV procedure?
Sure, that is what we are discussing and looking at different perspectives. So any other views on this, please?
Good morning, sir. I am Mahesh
Saravanan,
registered valuer, sir.
Yes, sir.
Sir, my point is, it looks like this is instead of individual valuers, IBBI is proposing maybe for RVEs, registered entities, because entities have all the valuers, SFA, P&M, and L&B. So it is indirectly treating it as no individual valuers may not be required. It may specify the RVs to engage, and they will take responsibility because they have the RVs within the limits. There are various regulations for them. So they can complete the valuation as a one shot as per this terminologies and all is concerned. That's what viewpoint from my side.
So as of now, as we all understand, IBBI has identified IPE to be appointed as an IP. that we are all aware about. But as of now, RVE is not yet identified, specified to be appointed as RV. Maybe IBVI will bring about amendment in this provision also later. But
Yes.
this is the position that we have today.
Yes, it may lead to the same to RBI.
Yeah, that's okay. That's okay. It may happen that they may come
Yeah.
out with amendment to that regulation also. Yeah.
And another point is here, sir. In
Yes.
the earlier provisions, we have a 2 values for each class.
Yes, please.
So now here in the RP has assigned only one RV.
Yes, please.
Again, he has to appoint maybe 2 RVs, different RVs,
Fine.
where 2 valuations may come.
Yes, please. Yes, please. Yeah,
This
that problem would still be there. Yeah.
will come, sir. Okay, sir.
Sir, might
Yes,
be
please.
this provision is amended, is proposed amended that sometimes one valuer is appointed and the asset class of the other assets are very minimum and very meager to take a simple report, very minimum report on that.
Yeah.
And even to not to appoint a separate valuer, that valuer only can take the valuation on a small part of the other valuer and include into his report, because
Right.
the appointment of the second valuer is not viable at
Not
that time
viable. That's
on
right.
behalf of the IRP or CRP, etc. So that is open for ease of the doing business.
Okay.
Might
That's okay. Yes.
Good morning, sir.
Good morning, sir. Yes, sir.
I have one doubt, sir. Actually, the RP appoints valuers and gives a copy to the COC. This
Yes.
appointment values information. The COC decides that the valuation may be deferred because the CD has come forward with an OTS proposal. So COC with 100% voting rates, can I ask RP to defer this valuation work till the OTS proposal is approved? Of course, it is somewhat deviation from this present topic.
Doesn't matter. Yeah.
This COC with 100% voting rates can ask RP to defer this valuation work
Defer the valuation.
because the RP has appointed already. RP has already appointed valuers and gives a copy of this to the COC, sir.
Yes,
But
please.
COC, what COC decides, COC with 100% voting rates have asked the RP to stop the valuation works because some voting proposal, some proposal is going on with the COC. So that's why he has asked the RP. So whether RP can defer this valuation work.
So members may kindly share their experiences on this aspect, please.
Yes, sir. Because I already put in the chat box also the same thing.
Right.
Also.
Right.
Yes, yes, sir. Thank you.
Sir, I think the valuation work cannot be deferred beyond the timelines given in the IBC regulations.
That's right.
Yes, I agree with you, sir. But
So,
it is a
so
mandate.
till that time, it is
of the
between the
RP.
RP and the COC. If practically there is some proposal which the COC is considering, so definitely it should be in the knowledge of the RP, and RP, as per the regulations, if it is practically possible, then definitely, the question is over. But beyond regulation, it is not in the hand of the RP to, extend the timeline. And definitely, if there is a conflict, then, the RP has to go to the NCLT for taking the appropriate directions.
But as per 27 of regulations, it is a mandate on the part of the RP to conduct the valuation. But
Exactly.
the COC is interfered that you stop that valuation for some more time. That like that they have given orders to the RP.
No,
But COC cannot stop. I believe, sir. I'm sorry to interrupt. COC cannot stop RP's responsibility. It is RP's responsibility
it
to
cannot
take
override the responsibilities of the RP.
Yes,
And definitely again RP has to be driven by the regulations of IBC, and if there is still the COC is putting any kind of pressure, definitely the RP can have every right to go to the NCLT for this.
Absolutely. Absolutely.
Exactly.
What COC is saying that COC wants to revive that company, so that's why he has to wait. But in the COC minutes also it is resolved like this actually.
No, it can happen, but then appropriate channel has to be followed.
Yes,
that IM has to be there, and the RA, whatever proposal is there, then RA has to be, the resolution applicant has to submit their application once the Form G is submitted, and they have to follow the timelines. or otherwise, if the COC takes a call, they are sure that they wants to withdraw the
Yeah.
the solvency process. They have every right, by passing a resolution, the special resolution of 75% or more. They can always do that.
Can RP file a condonation of delay in the IF for condonation?
I don't think so. So again, I mean, condonation is not. I don't think there is a provision of any condonation beyond the timelines given in the IVC. The only thing is, if the whole process is getting delayed, then only an extension can be sought, and there should be an justification before the honorable NCLT. That I think can be done.
Absolutely, yes, please. We have the timeline chart, T chart, but no condonation is provided for in each step of that whole process. Condonation is 180, 270 that we are all aware about. But each particular step, I don't think you can ask for condonation.
But the corporate has directly approached to the COC for this some motives proposal. That's why he has the COC is directing like this actually.
Wow. Okay.
Okay, sir. Thank you.
Sir, condonation is basically, if I understand well, if there is any order from the Honorable NCLT to file some document or report, specifically, and we delay that, condonation is for that need to be filed.
Okay. Right. Any
Good morning,
other
everyone.
Yes.
Good morning, everyone. This is Sajeev Deora.
Evaluation approach. Yes, Deora, sir. Yes, sir.
I'm an IP and a chartered accountant and practicing as an advocate.
Yes, sir.
So the first point I'd like to make, which I've always encountered, is there has to be some minimum amount over which the value has to exceed before you appoint valuers. One of the participants had remarked this. So in my view, it will serve the purposes of valuation processes and the IP and the CRP costs. If you were to provide a de minimis kind of an amount and make that price discovery through some online process, which IBBI is introducing also.
Yes, please. Yes, please.
Which will save the cost and make the process faster. Yes. The second is I like to mention if other valuers are appointed by one valuer, one, of course, there have to be reasons for which other valuers are being appointed, and also reasons for which that valuation of other valuers is not to be adopted by the main valuer. It's not binding on him to adopt it. It's an optional thing.
Yeah.
So reasons have to be recorded and they have to be made available to the concerned stakeholders. The third point I like to make is that when you have a main valuer being appointed and he's aggregating the other values with it, he must make an assessment whether the enterprise value is greater than the sum of the parts or not. Especially in case of operating companies, and especially say in case of M&As that you just pointed out. The sum of the parts is always lower than the whole. So there are enterprise values which must be examined, at least in case of operating on a recent date kind of assets. The fourth point I like to make is just to do a review internally. There is already a mechanism of appointment of joint auditors in Companies Act, and the Institute of Chartered Accountants laid down guidelines and their standard auditing practices in place as to how the joint auditors are appointed and how the liability is shared between the joint auditors.
Yes.
Maybe the experience of joint auditors can be looked at instead of rushing through this current amendment. Some time can be spent on examining the joint auditor's position in discussions with the Institute of Chartered Accountants. And that experience can be imbibed in this process because, as you mentioned right in the beginning, valuation is the most important aspect from which the bedrock of entire process is evolved. These are my 4 suggestions, sir.
Right, sir. Right, sir. Duly noted, sir.
Thank you, sir.
The participants to kindly mute yourself, please. Any more views on this, please, on this proposal? Mute yourself, please. All the participants. Kindly mute yourself. Kindly mute yourself. So any further views on this, or we can move to the second point? We can come back to once again, no issue at all. Let's move to the second one. In the second proposal of IBBI, we are talking about only one valuation estimate for companies up to a certain asset size or companies belonging to or identified as MSME companies. Proposal is, it is proposed that in CIRP of corporate debtors, I'll share the screen again, please. So the second proposal says, it is proposed that in the CIRP of corporate debt, having assets. Kindly mute yourself, all the participants, please. Kindly mute yourself. Thank you. It is proposed that in the CIRP of corporate debtors, having asset size up to rupees 1,000 crore and CDs classified as MSME as a default position, RP to appoint only one registered valuer for providing the estimates of fair value and the liquidation value. However, keeping in view the complexities so involved, if COC so decides to have two valuers, it has to record the reasons for the same before RP takes steps for such appointments. This is where IBBI is trying to fix some kind of a threshold of the asset value, doing away with the process of appointing two valuers for each of the asset classes. They are saying only one valuer may be appointed in the case of asset value being less than 1,000 crores or a company being by default a MSME. So what are the views of the group members here, please? Let's discuss, deliberate.
So, this proposal, I think, involves certain questions.
Yes.
This particular paragraph.
Yes.
So, in my view, first question could be the threshold could be, I mean, 1,000 crore is still a good size to put the pressure on a single RV.
Right.
Any class,
Right.
to assess the valuation, the CIP value as well as the liquidation value.
Right.
Secondly, there are certain companies, specifically the service companies, wherein hardly the assets belonging to the the land and building and the plant and machinery. Oh, they are, but that is very not technical. So that would be managed. But in case of a manufacturing industry or a company, I mean, having that size, it's still, I think the threshold is on the higher side. I mean, 500 or 200 to 50 kind of threshold could be there. That's one. Secondly, it is mentioned that, the COC has now, steering in its hand, to decide about the valuer. So instead of the regulation. Now, the question emerges, the RB has to go to the COC that, okay, in my opinion, there should be two valuer or one valuer, either ways. Now, you let me know, whether I should go for one valuer or two valuer. And what are the factors or criteria to decide those complexities that, more than one valuer has to be appointed. So, I mean, that will again, elongate the, the process of CIRP, to decide about this.
Right.
So these are my two questions.
Any more views, please?
Yeah, Mr. Gupta, I believe in principle, this is a good suggestion. But otherwise, with companies, there is always a challenge that of insolvency costs and the valuers tend to get paid in a very delayed manner and so on and so forth. So this would reduce the cost of insolvency. And I would tend to agree with Mr. Gupta also, that perhaps the threshold can be relooked at.
Okay.
Because if it's 1,000 crore company, even if I take a distress value, etc., something like that, you would still be able to realize 250, 500 crores, which is a decent amount. Right? So if we reduce it to say 100 crore or something, and then, of course, that would be a fit case where perhaps, because then the complexities would also be lower.
Yes, please. Yes, please.
Where someone can do it quickly, especially if there are financial assets.
Sure. Any more views? Yes,
I think this is sir, my name is Prakash. I am an insolvency professional.
Yes, Prakash.
I think this is a good proposal because in order to streamline and make it little faster, I agree with the earlier speaker saying maybe the 1,000 crore can be, relooked at 750 or 500. But putting a class and saying only one valuer is a good decision, because anyway earlier they're saying one valuer only, and one valuer can sublet or use another valuer.
Right.
I think it's a good suggestion. We must back this proposal to go through.
Okay.
Thank you.
Good. Yes. Deora sir.
Yes, sir. I just have to inquire. I'm a bit unclear. Is 1,000 crores the book value of the asset at a gross level or a depreciated level, excluding intangibles, including intangibles, because there could be certain assets capitalized? So let there be some clarity as to what 1,000 crores means.
I'm sorry. What apparently looks like is the balance sheet value after depreciation and only tangible. Looks like you are clear. You are very right. There needs to be some clarity, but I think it will be tangible after depreciation.
Correct. If that is recommended to IBBI and it is incorporated in the clarification, it will help the purpose. Thank you, sir. Thank you, sir.
May I request Mr. Ramachandran to mute himself? I mean, intermittently he's getting unmuted.
Mr. Ramachandran, kindly mute yourself, please. Thank you so much. Thank you, sir.
I agree. Or maybe the administrator should mute him, please. It's really disturbing the flow. Thank you.
It's full of restaurant, restaurant, hotel, beach, Mr.
Ramachandran, please, can you please mute yourself?
The building inspect பண்ணி certificate கொடுக்கணும். அதெல்லாம் இருக்கணும். அதுதான் இப்ப அந்த
So he's muted, sir. Fine, thank you. Any other views from the group members on the second proposal? Only one RB to be appointed if the asset size is up to rupees 1,000 crores or a company by default is identified as a MSME. Objective seems to be to cut down on the cost involved of CIRP and also to fast track the whole process. Power being given to COC to decide whether to have more than one. So there is a basic underlying change happening here. That decision to appoint more than one valuer is now going to pass over to COC instead of only relying on the decision and judgment of RP as in the present circumstances. Yeah. Yes, Mr. Ramesh Kumar, sir.
Yeah, good morning, sir.
Hello. Good morning, sir.
Hello. Hello.
Yes, sir. Please go ahead, sir.
Sir, because actually what the IBBI brings this RV, the only one RP appointed. It means I think it is a very backward decision. Three valuers have the different field. One is a mechanical and one is civil, and the third is a chartered accountant or any accountant. And putting one person or for 1,000 crore and for the sake, RV, the registered value is not getting lot of money from his fees from the assignment, and bringing this kind of suggestion, I think it is a backward decision. Because there is a CRP is concerned, there is no problem from the RV side. It is from the IP side. Because IP is not able to get the data from the carbonator for whatever it is reason. Maybe he is not getting support, he is not fully utilizing his time in this process. There is so many reasons is there. Okay. So my suggestion is there, keep only can put it, maybe they can maybe if there is a one class each can be appointed instead of two. But saying that only one registered value will be put and he will take the assistant from how a SFA value can do the plant and machinery doing the evaluation.
Okay, okay. So I think there is a, yeah,
Sir,
there is
here I am.
Yes, Ramesh Kumar, sir. Yes, sir.
Sir, here I am understanding that one valuer for each class asset, whether one valuer for each class asset.
No, I don't think that is the intent here. They are talking about only one registered value.
But how the SFA valuer can value the land and building, plant and machinery, and how the land and building can value the plant and machinery and SFA? So it's
That is the question,
contradictory
sir.
enough,
That is
sir.
the question, sir.
Or you should introduce a separate degree that one can read all the asset class and pass that exam and then go for the valuers of a one. So some type of syllabus should be modified and one can appear for the RV of all the class assets to be recognized by the IBBI.
Right, sir. Right. So there is a clear distinction between the first proposal and the second proposal. In the first proposal, they are saying one valuer to be appointed, and he has the option of appointing support valuers if required, subject to whatever condition they have proposed. But here in the second proposal, they are talking about appointment of only one valuer if the asset size is less than 1,000 crores or MSME company, and decision to appoint more than one valuer, it doesn't rest with RV, it rests with COC. So there is a clear distinction between the provisions of proposal 1 and proposal 2 here. So any views, any recommendations? So what should be response to IBBI with regard to this discussion paper on this?
I think we should go ahead with, sir, my name is Prakash.
Yes, sir.
I think as one of my speakers friends said that if it clearly clarified 1,000 crore depreciated value or gross value,
yeah. Okay.
I think we should go with that.
Okay, okay, fine.
Sir, in the first case, if a valuer is appointed another value, at least 80% responsibility of that valuer also. Otherwise, he will make the mess of all the process and give the value of his own, and the valuer who will be appointed that valuer is not in a position to corroborate or have the insight of the valuation because he don't know about so much of that valuation. So at least responsibility is not of the 100% of the first valuer, but it may be 20%, 80%. 80% of the responsibility should be of that valuer who is valuing the property.
Okay, okay.
So that both may be binding and or remain ethical towards the valuation.
Right.
Right. Mr. Gupta, yeah. So the thing is that if valuation is to be given to only one entity and one valuer, and that particular entity or valuer has to go and appoint another set of valuers for specific asset class or some specific areas, then the provision in the IBC where the appointed valuer is liable for the entire output irrespective of the external expert being appointed, that needs to be amended.
Absolutely, absolutely. Absolutely.
80-20, I don't think 80-20, I don't think that will be viable. But there has to be a joint liability. There has to be a joint liability. The responsibility of the external or other expert that is appointed should also be enshrined in the regulations. It cannot be, I mean, one can give a responsibility to the appointed RV to use diligence in appointing a capable expert. To that extent, the RV should be liable, but the deliverable responsibility needs to be on that expert. To that extent, whatever amendment needs to be made in the code and the regulation, that should be made.
Kindly mute yourself. All the participants, please. Kindly mute yourself.
Sir, in addition to this, my friend's view.
Yes, sir. Kindly mute yourself. All the participants.
Sir Ramachandran, can you please mute?
Ramachandran, sir.
This Ramachandran.
I will do that, sir.
They are muted, sir. Please continue.
Okay, thank you. Thank you. Thank you. Yes, sir.
Can I
Sushil.
speak?
Yes, sir. Sushil, sir.
Sir, in addition to this, I'm having one suggestion. Can we recommend IBBI that they should make the proposal number 1 in such a way that the whole responsibility goes to all the valuers who have given their inputs.
Okay.
Although, of course, they are going to be the registered valuers with IBBI.
Okay.
If any another expert is there, then don't know issue of the responsibility. Instead of making it any percentage, 20, 80, whatever it may be.
Fine. Okay.
Okay, thank you, sir.
So Deora sir also
agree.
mentioned about the concept of joint audit, which is prevalent in the corporate world, and the Institute of Chartered Accountants of India have some guidelines with regard to that. Probably we can take a cue from there. We can probably refer to that particular joint auditor statement and look at how the responsibilities are divided in that case. And probably something of the similar sort can also be looked at and enshrined in registered valuer guideline also. That we will check, sir. Rajendra Kumar, sir.
Sir, good afternoon, sir.
Yes.
Sir,
Yes.
I would like to know, sir, why this proposal has been brought. If IBBI is facing some difficulties with existing proposals, then it should be made more simplified. Appointing only one valuer makes it more complicated for all the process, because that valuer may not be able, as many speakers have pointed out, he may not be able to value all the assets. So his valuation will be differing from what should be the actual value. It may differ up to 50%. So it should be more simplified. It is my opinion.
Okay, sir. Fine. Yes, sir. Vaishali Patrikar. Yes, please, madam.
My opinion is the existing provision of 2 valuers of each class, except that there should be 1 valuer of each class. That should be the amendment.
Okay.
Because that covers everything.
Right.
And instead of this 1,000 crore limit or threshold, it should be 50 or 100 crores. That is
50 or 100 crores. Fine.
Because even for very big companies also, the 1,000 crore is not reached. So it is better to have 1 value for each class and 50 or 100 crores limit.
Noted, madam. Noted.
Thanks.
Shyam Sundarji. Yes, sir.
Yeah, in my view, it should continue that at least 1 valuer in each asset class to be retained.
Okay.
And at least one of them should be dual qualified, like SFA and mechanical, or land and building and SFA.
Oh,
so it will be ideal to handle any situation.
Okay. Dual qualified. Should be dual qualified.
Looking for people, having a dual qualification. I mean, it's purely my,
Yes,
opinion.
sir.
All due respect, expecting people to having dual, qualification won't be a practical, solution. The proposal, because people who are from the finance fraternity, they are not expected to go for taking qualification for the engineering side, and it's not possible at all. Maybe there are people from the engineering background, they can go for a finance kind of qualification they can have. So I really appreciate the view. And, again, so it should not be
wherever available it is suggested. Wherever available and feasible it is suggested.
So that should form part of. I mean, if someone is qualified like that, definitely that the professional may come up and put up his proposal or her proposal rather. I mean, put it in a.
Yes, sir. Yes. Any further views?
Sir, the threshold is on a higher side. Sir, instead of 1,000 crore, rather it should be 300 crore. It will be better. Should be capped at 300 crore.
Okay.
Yeah.
300 crores.
Rest everything is fine.
Okay.
Hello.
Yes, sir.
Sir, my suggestion is that there is a MSME sector. 250 crore turnover is there and 50 crore investment in plant and machinery. Okay. So that's why on the 250 crore, they have to be put one class each SFA, registered value for each class, and more than 250 crore, which is not a MSME. So it should be they should be appointed 2 registered value for each class.
Okay.
Okay. And somebody saying that I have dual qualification. If I have a chartered accountant, post accountant, or a lawyer, can I give 2 certificates in one company? It is not possible. Okay. So if I am doing the post audit and I would do the internal audit same company, it can't be. But if any value is there, he can only do the only one activity in one time.
Yes.
Either he go to your SFA or either he go to land and building or he go to plant and machinery. He should select only one time.
Right.
Not 2.
Yes.
It is not available in every law.
Got it. Yes.
Sir, I have one more, point.
Bataiye, sir. Yes, sir.
Yeah. So, having said that, the proposal is, pointing only one valuer for all 3 class of assets. Now, everyone in the forum is aware of IBC, the fees for the professional, especially for the RVs, is very low, competitive, and since the company is already under CIRP, getting the fee on a remunerative fee according to the effort is practically have not been seen so far in the last
challenge. It's a
couple of
challenge.
years. It's a challenge, and expecting an RV of a particular class to obtain the report from other 2 valuers, irrespective of the class of assets, and quoting the fees according to that will make the life of that RV more complex in terms of, getting the, commercials or quoting the commercials for a company under IBC. So I think that all the professionals present here would agree with my viewpoint, appointing a single RV for a, company under IBC from this angle would be a difficult task.
Right.
And sharing the fees with the 2 professionals, definitely for their effort it should be shared, but sharing the low fees is a little bit difficult. Suppose taking an example, for a particular under IBC, an RV under SFA category quoted a fees of 50,000, or maybe that, again, the people present here would agree that 50,000 is a handsome amount.
Okay.
Yeah. So, and sharing that fees with other 2 categories are, and that too, because that particular RV is still not aware of whom he would be appointing, getting the quote and, taking the evaluation report from them, or, taking their expert in, including their, findings about the value of the particular class of assets, and, paying them, would be, I think, a complex matter.
Okay, fine. Thank you, sir. Rajendra Kumar, sir.
I've put up my points, sir, already.
Okay, thank you. Shyam Sundar, sir. Manmohan Jindal, sir. Yes, sir.
Sir, I wish to add here that if RP or COC appointed valuer, then the quality of work is different. If RV appoint another RV, then the quality of work will be different, and it will be on the compromising state. So appointment should be directly from the RP of the individual asset, whether it is 1 or 2.
Okay.
So 1 is also enough, because 2 is taking for the that one should not make so much or indulge with anybody, or so 2 different values are taking for the transparency. But if one will do, definitely ethical issues are on the RV, he is binding under the law, so might be he will not do much blunder in also. So one valuer is also sufficient, but it should be appointed by the RP, not
Right.
by the other valuer.
Right. Right.
But
Got it.
I have a counterpoint to this with
Ji,
all
sir.
due respect again.
Ji,
I
sir.
mean, so Mr. Jindal has raised question about the the quality of reports at the level of RV. So wherever human interventions are there or decisions or the discussions are with the any kind of humans irrespective of the level. So that can happen anywhere. Again, RPs are again professionals, people from our fraternity only, people among us only. So that can happen at that level also, and we have seen that has been happening in the past as well. So I don't think, I mean, putting that point that there could be, kind of quality of report would be compromised if one single RV is appointed, and so that can happen anywhere and has been happening in the past in my view. So that should not be the point of contention.
Sure, sir. Noted. Yes, please. Thank you. Any further views on this, please?
Hello.
Yes, sir. Mukesh Chand, sir.
Yeah. The reasons given are that there is delay and the cost involved. Have we made any study on this aspect? What is the cost of valuers and what was the delay in their appointment, which has led to this proposal?
It's not mentioned in this proposal paper of IBBI, but
because the cost aspect was earlier when the valuers were small in numbers. There are too many valuers available. So there are a lot of competitive biddings there. So cost aspect should not be a problem.
Okay,
now.
so cost aspect is not,
And
should not
when
be
we
a
have
problem.
when we have two valuers, there is an independent views available of the two valuers. One, if in case we have only one valuer, that independence will be lost.
Yeah.
And there are chances of lesser transparency in valuation, and maybe some influence will be there on the one valuation.
Yes, sir.
Sir, I also agree. There should be two sets of valuers, even if only one RV is appointed for all three classes. So there should be two independent RVs. So I think the concerns which were raised in the earlier point that there could be compromise with the quality, that can be adhered to a larger extent, and definitely that will be more valuable inputs.
Sure, sir. Sure.
Sir, in my view, the existing provisions are very well balanced.
Okay.
Are excellent, and that should be continued. The proposed amendment is just a research which IBBI may be trying to do, and may not yield the desired results, because assigning the entire valuation to one valuer may lead to, I mean to say, the discrepancies in valuation. Because if two values are there, there is a check. And if there are wrong assumptions or something, wrong valuation, that can be detected. But if there is a single valuer, we are compromising with the quality and with the quality of checks and balances that we have in the system. And this is a very small cost. For avoiding this small cost, we should not compromise with the quality. So existing provisions are good enough, and that should be maintained.
Yes. Any further views, sir, from any one of the members?
Sir, I mean, even in the second proposal,
yes, please.
I think the intention is fine, but the threshold should be definitely relooked at. 10 crores is too high. I think 100 crores should be more than enough, because more than 100, again, the complexity will definitely increase, and there should be definitely two valuers to take care.
Okay.
That case.
Okay. 100 crore threshold and two values should still be there.
Yes.
Fine. Yeah.
Two values should be there.
Right.
Or maybe there can also be cases where what is the composition of assets, whether it is mostly financial assets or they are tangible assets. Based on that, maybe some call can be taken.
Okay. Yeah. Okay. Good. So any further views, observations? So we have discussed most of the points, most of the observations given by various learned experts, participants available on this platform today, Sunday morning, for a discussion. Thank you so much for joining in, sparing your valuable time, family time on a Sunday, and spending time on this important amendment proposed by IBBI. We shall be collating the views given by all of you today, and we will compile the whole thing and submit it to IBBI as a recommendation from the side of ICMAI RPO. I once again thank all the participants for sparing your valuable time in joining us and elucidating your views, your perspectives with regard to the proposed amendments of IBBI. Thank you so much, all of you. Thank you,
sir. Thank you so much for holding this.
Thank you, sir.
Thank you, sir.
so much, sir.
Thank you, Mr. Gupta and everyone.
Thank you very much, sir.
Thank you very much, sir.
Thank you, Gupta.
Thank you, sir.
Thank you all the participants for joining.
Thank you, sir.
Thank you.
Thank you all. Thank you very much.